Good evening, traders. It is Wednesday, the 5th of September. I can't believe it's already September. But I am your presenter, Adam Harris, and any queries regarding this evening's midweek market focus, you can either email me. My email address is here on the page, adam.harris@knowledge2action.co.uk, or alternatively, you can post the questions within 24 hours on the midweek market focus page, which is in the graduate login. And actually, while we're on that, what I should do is include the graduate login address, which I will give you on the next page. So let's just work forwards a bit here. The login for the graduates has been updated, so you can just take it down here. This is the new graduate login URL. And what I'm going to cover in this week's midweek market focus is we're going to have a look at the markets, we're going to have a look at some of the stock indices, have a look at the currency markets, and then I want to cover very briefly just the idea, the concept of keeping a journal of all of your trades, which you should be doing. And it's not something just for beginner traders, it's something for every single trader of all kind of ages, degrees of experience and skill, and anywhere on your journey, this is something that is of immense value. And then I'm going to have a look at a couple of setups that might be coming up, something just keep an eye out for, and then I just wanted to briefly discuss an issue that I've encountered with our pivot indicator, so just a workaround with regards to that. So let's have a look. Let's move across, and what I'm going to do is jump to the dollar index, and the dollar index is a collection of the dollar against several other currencies, major currencies, including obviously the Swiss franc, the euro, cable, I think it's the Swedish krona as well. There's a list of those, and so what we're looking to do is to see how the dollar is performing against all the other currencies. And because what's been happening in recent times is this is a weekly chart, so this is quite a long period of time. This is actually showing, because we have, guys, notice how I'll keep repeating myself, so higher lows, higher highs. We have a trend line here. Now the trend line is just kind of a guide for me to see if this is deciding to stick to it. Now the only thing is with e-signal, the dollar index shows me there's a delay of 1 day, which means that the candle we can currently see on screen is yesterday's candle. So I'm not really sure what's going to happen ultimately today, but this does give us an indication of the fact that the dollar is currently in an uptrend against a lot of the others in the basket. And I am seeing what appears to be sort of piercing of this trend line, which implies that there is a potential reversal coming up in the near future. What that means is that if that does indeed unfold, what it implies is that the euro will continue to strengthen against the dollar. And so let's go across and have a look at the euro briefly to cover that. This is a weekly chart of the euro, and as you can see from the weekly chart, we have a series of lower highs and lower lows, and it's respecting this trend line. So you can see that the 50 moving average is underneath the 200 moving average, and the 20 and the 10. So this grey one that I have set up on my chart is the 10 moving average. So you can see that they're all kind of fanning out. There's a bit of a pullback occurring at the moment, and this all makes complete sense. If you look in terms of your phase 1 and your phase 2, or your extension and your retracement, we're currently doing a phase 2 retracement on the weekly. So all that really means is that obviously the weekly chart is fully entitled to do its moves in and out as part of its natural movement. And it's pulled back, and it's currently sitting right at the bottom section of this downtrend. So there is a very real possibility that price could actually reverse and then kick back into a longer-term downtrend. So I think that's the first thing we need to have a look at here, is that there is a possibility here. We've seen that the US dollar and the dollar index is sitting on the top at a point on its trend line. Let's just quickly look back at that again. You can see that this is sitting at a kind of a crucial juncture here, where if it breaks that trend line, the implication is that it's probably going to continue to weaken against currencies. It'll probably cycle up and then continue to cycle up and down, but start heading downwards. And so we're at a very crucial juncture, literally just today and probably over the next couple of days, just to see what happens. And the euro is at a similar juncture as well. It's kind of doing the pullback on its weekly, and it's trying to decide if it should then reverse and kick back into a longer-term downtrend. In other words, into a phase one move into the downtrend. And obviously that means that on a daily basis, we're going to be wanting to make sure that we're looking for more short opportunities. And then, of course, and if it breaks this, and I've also got some key support horizontal levels in here, support and resistance levels, and I'm looking to see how the euro behaves against it. Right now, it's pulled quite a far way back to the previous high, and it's really pushing up against that ceiling. So I think what's happening here is, a lot of people always say, well, I'm so bearish on the euro, it absolutely has to crash, and they often forget that the US dollar is the biggest component of the currency market. And if you're living in the US and Europe is pretty far away, most of the Americans are very much concerned with their own markets, and they're bearish on their own market, which in turn pushes the euro higher. So there's a lot of other factors. Not everyone is concerned about the euro. So the US dollar is kind of coming under its own pressures here. So if this breaks higher, it's perfectly capable of doing that, and the most likely reason would be US dollar weakness. Anyway, so we're having a look. We're at a very crucial juncture right now. If I pop down to the daily, what I'd like you to see is that bigger picture we saw, which is this weekly move down and the pullback. This is where we are, and the daily is actually made up of higher lows and higher highs, which means that currently the daily is actually in an uptrend. But it's reached this point where it's potentially going to reverse and go down. And it's really simple as to what the implication is. It's very easy to decide. I mean, it's very tricky to stay in the trade right now. So I would advise beginner traders to sit outside of trading the euro just yet. First of all, what we're looking to see is if the euro can actually break this resistance level and this trend line. The implication being that if it does, it will probably test and see if this resistance becomes support. And if it does, by that time it's starting to break outside of this downward trend line. The implication being that the longer term weekly trend is actually broken and is probably going to start going into an uptrend. And what we'll have then is we'll actually have a pullback, probably down to another level, and then it will continue upwards. That is if it breaks this upwards level here and tries to run up to that. So that's the implication that is implied when it starts to do that it is actually much more bullish than bearish. If, on the other hand, it does not break this trend line or this resistance level, and indeed starts to stay, it respects this downward trend line and starts to break down through this support level and this upwards trend line, the implication is then that actually that weekly downtrend is still intact and it is continuing down on its downtrend. And that's not a bad thing. I mean, we just have to sit it out until we get a clear signal from either side. But the beauty of that is that the implication is we can position ourselves for a much longer period of time which direction we should go. So if we find that this breaks up, what I would do is wait for a pullback to either to a key support resistance level or to this trend line, and start looking for opportunities to position myself to go long again. If it breaks down, I'm starting to look for pullbacks to position myself to go short again. So and then I have much more confidence, which means that I'll just start to trade the cycles on the euro and trade it down. So a very simple way of doing it is have price break down through this trend line, come back up to test resistance, and then start looking to sell and go short. And then find a trend line that's heading on its way down and start finding positions to do that. And every time it's doing its move down, obviously then I can take income generators in that direction, and I can take snipers and pivots in that direction with a lot more confidence that the likelihood, if the weekly is back into a downtrend and the daily is in a downtrend, the momentum is incredibly, your success rate should be really high as long as you understand this is the direction in which we're going. And so that's really it. I mean, this is coming from a purely technical analysis perspective, but obviously the reasons for whichever way it breaks, the reasons will subsequently become clear. If it breaks up above here, we'll start hearing news about how the US is encountering issues and so on and so forth. We'll start hearing news, and that will actually explain why it's going up. And of course, if it breaks down, we'll start hearing news as to why that's happening as well. So yeah, just be aware of that. Let's look at cable as well. Relative to what we've just seen, cable's incredibly bullish. And this is the third sort of partner in crime. This is the next one. And look at it. It's just broken through this resistance level. So even right now as I speak, there's actually a trading opportunity occurring here where we have a breakout and a retest of support. So that's fantastic. It's a really nice move. This is very bullish. So this is another reason why I think euro is likely to go long, because cable is simply just very bullish. If the dollar index is going to turn bullish, it's likely it will pull cable back. Now, the thing is that I kind of want to say to beginner traders to be very cautious of trading cable. It's incredibly choppy and volatile, and a lot of people want to trade it, but it's, in my opinion, my personal opinion, is not suitable to beginner traders, simply because of that volatility, where it goes up one day and down the next. So if you have the skill in reading the price action, that's fine. But anyway, what I do want to point out here, what we can take away from this, is we've broken above our 200 moving average on the daily. Our 50 is potentially going to cross over. We'll probably have a pullback because we're overdue for a pullback. We're going up and down, up and down. But the key thing is that it's broken through this level, and that's a very crystal clear level. So the implication being, if cable can do it, Euro will probably do it as well. If you just jump back to the Euro, we can see that the Euro is at the top of its level here. It's pierced above it. It's potentially going to try again, potentially even here, bouncing off this moving average. It's going to take a run at it. We should know today or tomorrow, even by non-farm payroll, which is Friday, so guys, be careful about this Friday. The implication being that if both Euro and cable are bullish, that this is indeed probably going to break through this downward trend line, then probably start to pull back, but that pullback is not a break down into the downwards longer term downtrend. Be aware of that. In that case, what it's done is it's broken its downtrend. It's doing a natural pullback, which is actually part of its move then to continue upwards. Okay, so just be aware of that. Let's go and have a look at the yen. So the yen is just really under a lot of pressure at the moment. It's desperately trying to go long, and not really finding. The support seems to be quite strong, but at the same time, there's just not a lot of buyers in it. So again, not really the best thing to trade. I would say that the euro is currently not that great to trade, as in just today or tomorrow or between now and non-farm payroll, unless you see a good setup. I would say cable is generally not a great chart to trade unless it's trending properly. So you have to be aware of that. The Swiss franc is normally just an inverse of the euro at the moment, and is looking to go short. So think about this. If the euro goes long, you should be looking for short-term trends and shorter trades in the direction south of this, okay, on a continued basis, certainly down to the 200 moving average. So that gives you a lot of opportunity to take shorts down there. Yen, as I said, is not great until we see yen break out into a longer-term uptrend, really get out of this mess. What we're looking for is clean cycles, not just a move up. We're looking for clean cycles. Even this move up here just fell back down. So be aware of that. We're looking for continued follow-through in terms of that move. Australian dollar, man, there's such good opportunities on these sort of the pairs that no one's really watching. This has kind of got a very strong downtrend. It has pulled back, admittedly. If we look on this as a weekly chart, I want you to observe that on the weekly basis, this chart is predominantly ranging within all of this. But over a longer period of time, it has been predominantly bullish. So my bias is always towards the longer term basis. But yeah. So we might potentially just be having a bounce. We had a really strong move up here. We haven't pulled back that far. This is potentially just going to turn around and continue up at least to this level. So I'd be careful of trading it, thinking that it's just going to head down. It may, but personally, I'm looking for clearer signals. I needed to at least do a pullback and then continue to a new low. So I'd like to see a series of lower highs and lower lows. And again, it's just dropping straight down. So we had a strong series up here, and I do know that the Aussies would prefer that it's sitting on parity. So they're much happier that it's actually coming down to this level. So just kind of those are situations. We look at Kiwi. Kiwi is going through a very similar thing. It's also trying to do lower highs and lower lows. So we'll look for that. But I still believe that the longer term uptrend is actually up. So what that means is potentially that if we have a bounce and reversal here, that actually the idea is for it to climb further and further up. And for me, what I've done is I've drawn in a trend line. So if I see that that's broken, then my belief is that it's then heading up to for a longer term up move. So yeah. So I know that this seems confusing for beginner traders because you're just trying to find a direction. I guess what I'm saying is that the key thing here is always to identify those key support resistance levels, because it's likely that if price is going to turn around, it will often do that at a key level for 90% of the time. So it makes sense that I would potentially trade this down to this level, so I have some opportunity to take trades. But certainly when I get near that level, I would be cautious of it. And the ability to identify those levels takes practice. And you often want to start by looking at your weekly trade. So if I hit W on my keyboard, I can jump to the weekly chart. And that allows me then, I'm looking for areas where price has actually bounced and reacted in the past. And for me, the next one down that I can encounter is there. And it's interesting, when you look at this previous high, we're not really there. We've broken through that. I'm not really going to consider that anything that serious for now. So yeah, I think we're probably trying to have a pullback before it goes long again. And again, it'll take its cue from the Australian dollar, which is kind of like the big brother. So let's have a look at CAD as well. CAD has been producing some interesting setups. It's generally a volatile chart to trade. Again, some charts are really easy to trade and some aren't, and I really recommend for beginners to trade the easy charts because you spend so much time fighting with something like cable to get your money, and meanwhile something else is just ticking over. So really take the time to trade all of the crosses, to have a look at all of those crosses. Regardless of the spread, the likelihood of success is actually more important, in my opinion, than the spread. If you're trading a chart with a low spread that's untradeable, that's pointless. And if you're trading something that is incredibly, with a great success rate on it, and it's trending very nicely, the spread is actually irrelevant. So, in my opinion, because you're going to make money on the one and just lose money on the other. So, I don't really, the spread is seen as the tax. So, we have a potential reversal occurring here, and the idea is based on the fact that we just have reached the strong support level. And what's happening right now is that there is a battle taking place here. So, a few of the trader coaches have decided to go long here simply because we have what appears to be 3 separate rejections of this level, very precise. And in fact, we now have what appears to be a reversal. So this is my particular setup that I've been looking at, which is quite simple. It was just an entry above yesterday's high and my stop below that and below the support level with a reversal taking place, and then taking my target actually just below parity, just because that 1, which is a round number, is going to cause a bit of a ruckus. And notice how my 50 moving average is close to that. So if this kicks off indeed, which makes it about a 1 to 2.5 trade, it's going to run up towards this level, and I'm just going to take profit as I go. I'll watch it as it goes, and then I'll just take profit at this level. So that's my trade setup there. Now let's just go and have a look and see what else is going on here. So that's with regards to the currency markets, and I'm just popping across to gold quickly to have a look at this. This is gold on the daily. Gold is in a very interesting position right now. Why? Because, well, it was ranging for a very long period of time, broke out of that, and with the kind of move that it did, this is important. When we talk about reading price action, please understand that the speed with which this moved out, this is a single week, it literally, and it's a very strong bullish bar, and the next bar is bullish as well. The implication being that the momentum is very strong upwards. And the next key kind of levels that I can think of, now that we've cleared a lot of this mess that's in here, would be up here. So what's happening right now is gold is testing this support level. Even as we speak, that candle is, price action is trying to debate whether this sort of resistance level can become support. But I'm thinking at the speed at which we closed above it, I'm thinking what's probably going to happen is it will boost up. So it's just something to keep an eye out for. And I will definitely, when it gets very close to sort of 1750, or 1765, somewhere around there, start exiting any trades I have or taking profit off the table. Because we need to determine if this is then going to bounce and start the cycle again, because it can cycle, it can do that. So there's just that to have a look at. And then I was just talking about charts that are trending and charts that aren't trending. So let's have a quick look at Euro against the Aussie. Again, this is a weekly one. I'll go to the daily. And I just want you to see how strong some of these trends are. We just have very clear trends. You guys should be trading the hell out of these charts. Now, but I must alert you to the caveat, which is very bullish. Everything is great here. But notice how there's been no pullback at all. This is a daily chart, and we've had just one straight line. So at some point, it's going to pull back. And when it pulls back, what you'll do is you'll get income generator alerts. So your income generator will detect that there's a pullback occurring and tell you to buy. So just be aware of that. So the Euro Aussie, the Euro Kiwi, the Pound Aussie, and the Pound Kiwi are all in positions where they're trying to pull back at some point, at least to touch the 10-day moving average, and probably the nearest support resistance level. And then you will get income generator buy signals. But in the meantime, it's just moving. It's just really, really it's just bulleting its way along. So it's good for things like pivot trades, which unfortunately for these, they tend to trigger at like 2 in the morning. So you probably have to be at your desk at 12:01 and literally just place a buy order at your blue pivot level and your stop below the red line and your target at the green line, which I'll discuss later. And just place it every night on Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, and your success rate should be pretty strong. The only concern I have is that we're due for a pullback. But I say that until we have that pullback, you should just be trading it long, because it just could continue all the way up to here. Then it could pull back, or it could pull back tomorrow. The point is, once it pulls back, you can get back in, and you'll make, if you do happen to enter that last trade, typically before it turns around, you'll make the money back. Okay, so that'll happen. It's very good, and take all 4. Don't just take the 1. Take all of them, in my opinion. So I'll be doing that as well. And the spread on Pound Kiwi is ridiculous. It's like 10 pips or something. So it can be a bit high, but the success rate is incredibly strong. So yeah, so these are great charts. Let's look at Euro Kiwi as well. Euro Kiwi is also moving up really nicely. Then we look at Pound Aussie. Pound Aussie, look at that. It's bulleting. It's only going in one direction. Next key level that I have identified is up here. So we'll be seeing, you can see how price action here is reacting against some kind of a level. So potentially you kind of highlight that, but we still have room to run on that. Pound Kiwi. We have, just continuing. I mean, this stuff is just hits the level, hesitates for a while, and then just keeps going. Then we've got Cable CAD, which is a big ranger. If we look on the weekly, this is important to identify this. This has a habit predominantly of just ping-ponging between all these levels. I'm sorry, I didn't have all these lines in here before. It looks really cluttered, but it shouldn't be this cluttered. But it ping-pongs between all these levels, and so we're really just watching to see where price will go. I can just remove all these key things. I don't need that, and get rid of that. And we just, it's ping-ponging predominantly between these levels. So I'm expecting this to run all the way up there, and we'll have a sell order placed here. Aussie, Kiwi, let's just have a look at that. Not really get anything clear. Now let's have a look at some of these. Aussie CAD. If you look on these on the daily basis, same thing. It's an Aussie pair, but it's just trending downwards. So if you look at stuff like this on the 240, pivot trades, guys, pivots. Look at the beauty of this. So everyone's obsessing over all these other charts, and these things are just printing money. You look at Aussie CAD, Kiwi CAD. Look at a few of these. There's really strong cycles on this, pretty predictable. Then we've got things like, what else we've got? Kiwi Swissy cycling down. So these are trending really strongly. Aussie Swissy, let's have a look here. So guys, I think I've highlighted about 8 charts right now, which are trending really nicely. And so that just take advantage of all of those. That's pivot trades, sniper trades, income generator trades. And those are the ones to be looking at, to take those. Okay, let's then go across to the indices. So let's just check that I am covering everything. Okay, so we've done the new URL, market overview. Let's have a look at the stock indices. So I'm going to look at the FTSE. I'm looking at the weekly. I can't believe I've got so many lines here. And it's currently touched on a level of support. Now what I'd like you to observe is over a period of time, if I make this a monthly chart, so monthly is the highest we can go. But I want you to observe that going back right to the late 80s, that we have these cycles that occur. And currently, we're hitting a real, what appears to be a head and shoulders, but don't be fooled. This is not a proper head and shoulders. We're kind of faltering with all the Eurozone issues. This is Lehman Brothers actually kind of, I think, collapsing here. 2008, there we go. That's the first sign of our recent recession crash. And so we're kind of with what appears to be faltering. But I would like you to note that we're continuing to do higher lows. So that's something we need to take note of. There is a downtrend line here that we don't seem to be able to break. So we're going on to the weekly. This is where what appears to be head and shoulders. The reason I don't believe it's a real head and shoulders, first of all, is that we haven't actually, even the other shoulder has still produced a high low. And we've bounced from it. What that means is that price came down here. If it was a traditional head and shoulders, it would have collapsed, and it didn't collapse. It actually has bounced. And not only that, but if we look at it in more recent data, we have a bounce with a low test with a rejection of the 200, a move up again, a pullback, and we're currently sitting where we are now on this trend line. So the implication is that it's much more bullish than bearish. But again, obviously, we will know if this starts to break down through this trend line and break this low, we then have a much longer term drop in the market. But I would not get into that until just yet. So if you're bearish on the market, you can be bearish or bullish, but just wait for those signals, because currently the market is more bullish. We haven't got any clear downtrend. We have a short-term downtrend on the daily, but there is always the possibility that, as you note, we have higher lows and higher highs. And we're literally just pulling back to that trend line and the 200 moving average. And, everyone could say, this is it, the market's crashing. And, of course, what can happen next week is it can continue upwards. And as I've demonstrated, in terms of cyclicity, we are capable of going much further up. So before we really what I need to see is one of those longer-term trend lines broken. Now what I'm going to do is compare this to some of the other stock market indices around the world. I just have so many lines in here. Let's just go and have a look at the S&P. So just looking at the S&P here, we've got all the moving averages fanning out. We've got higher lows, high highs. We've broken the recent high. It's not really pulling back as far back as the FTSE, potentially just, it has broken this downtrend line, which is just a daily one, so it has broken that. So this is kind of not really that bearish, and this is one of the FTSE ones. High lows, high highs on the weekly. It seems to be finding pretty good support here, so I'm kind of going to go ahead and say that until that gets broken, I'm not really going to kind of panic about this too much. Then we look at the Dow Jones. Dow Jones, same thing. High lows, high highs, broken the recent high. Also has broken this daily downtrend, which looks like this. Also has broken that the temporary one that I put in. And is bouncing off the 50 currently. So really also finding some temporary support there. Has again also not pulled back that far in terms of the weekly. It's only sitting on that 10-day moving average. So I think that what we really need to determine is, can this level be broken? So I think what's probably going to happen is we'll find that there'll be another run at it. And I would say that if it fails again, yes, then we are potentially looking at a bigger market pullback or a bigger market downturn. But until then, yeah, I'm thinking, well, we're looking at all of them as a pack. They're all looking very, very bullish. And look at the Nasdaq here, has hardly faltered. It's actually got a bull candle at the moment. It's rejecting lower levels, hasn't even touched the 10-day moving average. So compared that to the FTSE, which has pulled right back, it's just hypersensitive. And I think that's possibly a proximity thing to Europe and all those issues, and our economy being much more interlinked. Then let's just have a look at the Nasdaq. Nasdaq bullish, finding some support there, and the Russell 2000 is looking very bullish actually at the moment, and is working its way up. So it's bounced off the moving averages. Moving averages are fanning out, and it's working its way up. And this is its downtrend line. So the FTSE and the Russell 2000 are the only ones that have a downtrend line that I would like to see get broken. But I have a feeling, since all of them are bullish and looking to go long, that is something we should side ourselves with. However, when you look at the FTSE itself is almost much more sensitive to things, but it looks like it's hit a level here, so it'll be very interesting to see if it bounces and goes long. If the rest of them go long, the FTSE will no doubt follow. The question is, can it break this downtrend line? The implication being that if it breaks this downtrend line, it is going to come back and retest and go long, and it will have broken a much longer term downtrend line. It will be very bullish. So I'm kind of interested to see what happens with this. I would prefer to see this now starting to produce high lows and high highs on the daily before I commit to taking it up to this trend line. But yes, certainly that could be the case. That is our previous swing low, so we have price kind of working its way, bouncing off the 50, then carried on down. So I would say once I see that level broken, I would take the first pullback and head up to this level, trade it long. And you'll see some of the stocks haven't really pulled that back that much. Some of the individual stocks have hardly pulled back. They're actually just ranging. So I think the general mood is that individual companies that are performing well are not actually suffering yet. So this pullback is just on the FTSE, which itself is very sensitive, but the stocks themselves are holding the fort. And so I think when you look at the bigger picture here, we're still relatively bullish until we see if you see the rest of these things start to hit up and run, and then they hit the ceiling again and they pull back again. Probably at that point, once they break that low, that's it. That's a much longer term pull down. But that's not guaranteed until we see it. Right, and I think that gives a cover of all, that's a sort of good overview of all the different things there. So I'll be looking for longs on a lot of stocks. And guys, remember, the same as with picking the correct charts with the correct currencies that have nice, strong, clear trends. Don't torture yourself. Don't pick. It's like picking bad relationships. Some people, obviously, and we all do this, we stick to really bad relationships hoping it's going to fix itself. Trading, you just don't owe the charts anything. You only select the best charts that are trending clearly, that are making money, and those are the only ones you take. All right. So just you don't owe anyone anything. You're in this to make money. You're perfectly capable, guilt-free, of picking the best charts and trading those and making money on it. Really, seriously. And it's amazing to me how many people pick bad charts, and I don't know. They just don't know why you do that to yourself. You really are in this to make money, and the market will give you money as long as you just kind of, as long as you just pick the best ones. It will really do that. Okay, and I think once we've done that, let's have a look here. So I mentioned here about keeping a journal of all your trades, and I'm referring specifically to the idea of a very simple, easy to maintain Excel spreadsheet. Something where you just identify the chart you're trading, the dates, whether you went long or short, what the strategy was, whether you just bounced off a trend, whether it was a sniper or an income generator or a pivot or a reversal or a master trader strategy, if it was a stock. Not really worried about that. I would like you obviously to put your entry in, your stop, your target. Have it calculate what the number of pips at risk is. And obviously then keep a record of what the ultimate result was. Because remember, your trade setup, this is what your trade setup is. Your trade might not actually trigger. So if it doesn't trigger, that's fine. I think keep a record of every trade you decide to take, and if it does trigger, what is the ultimate result? Okay, where did it hit profit? Did it hit, in this case, this example, hit my target, or did it hit my stop? So you want to keep track of that stuff, and then most importantly is keep track of what was the pips that you ultimately made. So if it was a loss or a win, what were the number of pips that you won and lost on that? And then any comments, and your comments should actually be, what was it that you liked about the trade setup? What, was it a low test off a support level? Was it a low test on a trend line? Was it a high test off a moving average? What were the things that the evidence that you could build up? If it was a income generator, was it also a high test off a moving average? If it was a sniper, those kinds of things. I want you to get into the habit of identifying what constitutes a good setup. Things that are, what are the words, sort of characteristics of a good trade. And keeping track of that. The only other thing that I've done here is I love the ability in Excel of right mouse clicking and being able to hyperlink. I'm just going to remove this, but you have the ability to create a hyperlink and link it to a file on your machine, so that you could go to my computer. Where do I have this stuff? My documents. There we go, and I can have some pictures, and then any screen grabs, which, by the way, if you haven't done it, if you right mouse click on any chart, you can save an image to a local file. All right, save the image to that, give it a name, make sure we're looking at ring low daily, make sure you get the currency pair correct and the date, all right, so that you label the file. What was the currency pair? What was the strategy? What did you like about it? Was it a daily? What's the time frame? And what was the date? And then save it to that particular folder that you want to do. Then you'll find that when you come across here, you can grab something that you might like, and I'm just going to pick anything, it doesn't matter, pivot long for this example, and it will connect it to that link up. So you should be taking a snapshot before you trade as you're placing your order, and when you click on it, the beauty is that down the line you can revisit it. It will actually bring up that particular screen grab, and so you can see what the setup was that occurred that you didn't take, or that you did take. It doesn't matter, but you can see the before and the after, and this is very important because you're teaching your brain to recognize patterns. So your brain will do it. If you do this exercise, you'll be amazed at how quickly your results improve. And I mean it. This is the one thing that can completely change your trading for the longer term. And then obviously what happens is, whether it's a winner or a loser, very important to store the result snapshot as well. So this diary is something that you will keep with you for years to come. And you'll be surprised, because if you are taking the same type of bad setups, this is where it will come out. And you'll be able to very quickly correct bad habits, because you'll see I keep taking the same setup and it keeps showing me it's a bad one. And you're just teaching your brain to recognize it. And one day your brain will say, oh, you've really got to take the setup, and you'll take it and it will win. And it's because you've obviously taught it to identify, you've seen that setup before and it works. And you just pattern recognition, guys. It's a very powerful thing, and your brain is just saying, look, show me the good stuff, I'll give you the good stuff. Show me the bad stuff, I'll avoid the bad stuff. But you need to be able to study and review your trades. And reviewing it can be as simple as, if it's a loss, grab a snapshot of it, look at what it was, study the pattern. Just keep it really, really simple so it's low maintenance. All right, guys, and this is really the thing that can turn your trading around. Obviously, you have to have good technical analysis. But when it comes to taking trades, guys, I want you to take snapshots of this. Because a year from now, you'll look back and go, why the hell did I take that trade? Or you can actually work out down the line, once your analysis gets better, you'll say, geez, I would never take that trade now. But the fastest way to do it is to learn from your mistakes. Think about yourself as an athlete that's recording your swing, so that you can then study anything that you do wrong. And you can't see it except from the outside. That's where you see the errors. So that you'll see when you record it here. Right, having done that, let's have a look. What else did I say I would cover this one? So, okay, setups to look out for. I've kind of discussed some of those in the analysis. It's really just saying to you, look, on the Aussie and the Kiwi pairs, you should be looking for particular setups on that. If we go down to, if I jump across to the sniper chart, for example, you'll notice, we've got beautiful trends here. I mean, guys, this is ridiculous. Put in a 20 moving average, because price often bounces on the 20. And the reason you want to do that is you want to make sure that you're trading in phase 1 all the time. Phase 1, phase 1, phase 1. So if it's bouncing on the 20 and it bounces again, you're in phase 1. You don't have to wait for it to come all the way back to the 50 and bounce. So you're just looking at the quality and the angle of this chart. It's just fantastic. I've got a little account that I trade, a very small one that I trade here. And oops, I just hit target there. So I've just got a couple of trades open here, and I took a little £100 account up to 822 in about 2-3 weeks, just doing little trades here and there. So it's just predominantly keeping track of, and I just took a Euro Aussie trade, so I know I just hit target because I took it this morning. I just took the sniper. It was actually, it was that one, I think. I took it, or it was one of these. Anyway, and it just obviously hit target. So, and it's great, and as long as it cycles, just keep taking it. Okay, this is all really, really cool. And there's basic stuff here, guys. Very simple. Look at this. Here's this hits resistance. Look at that. Bounces back. Hits resistance. Bounces back. Breaks through. Bounces. Resistance becomes support. Goes long. Very basic, traditional trading. Very simple. Bounces on it. What have you got here? You've got a bounce on a 20, and it's a bounce on support, and it's a breakthrough and a retest. Beautiful. So those are the kind of setups I look. What do we, and we have a similar thing happening here now, potentially. We have a similar type of thing where it's just kind of broken through that. We might potentially get a pullback, a bounce, and a go long. Wait for that 20 moving average to catch up. So, we've got some, it's really, really good. There's some really nice setups, and you just keep watching for it. The only thing that can stop you is the next resistance level. So if I made this a daily quickly, and I look at the chart, here we go. The next potential resistance is probably there. So because we've seen that as support on the daily. So if we go back down to that 4 hourly, you'll see we're very close to it now. So I would still take a pullback and then go long again. We have that. But right now, to take it, that distance from where we are to kind of there is 30 odd pips. So you've got to be a bit cautious of that. This is now overextended. So you do want that pullback. But the idea is wait for the pullback and take it and go long again. Okay. Because obviously we're watching out. We know at some point, as I said to you, the daily could pull back. So we don't really know when that'll happen. But the bar will give us either a doji or possibly a high test or something like that. We'll get a high test somewhere in this chart. But I think it's still pretty bullish. And if you look across them as a pack, if you look at Pound Aussie as well, also bouncing, going long. It's moved quite a far way away from this 20 moving average, so it's also overextended and due for a pullback. But I guess I would rather give you guys the right chart, and then you know where you can go ahead and trade those. So all of that works pretty well. And those are the kind of setups that I think you should be doing. And also, pivots as well. So let's just see here. Income generators. We'll go and have a look at these. So I have my weekly chart. My weekly chart is just so I can identify a trending chart, mostly. So I can identify a trend and those support resistance levels. And then we have, what I do is I've stuck my pivot on my income generator chart. Why? Well, because you'll notice that if it's 12 o'clock at night and I'm on my Euro Aussie and I happen to be at home, and I have nothing else to do because I'm single, because I'm a trader, and that's kind of the price you pay. You'll notice that we have these bounces are so predictable. Bounce, go long, here's a breakthrough, it's hit that target. If you took the one yesterday, you would have hit target now. Here it didn't, at this point it didn't touch, it didn't enter. This one hits, that's 5, 6 o'clock in the morning. So if you're awake, you can take it. Even this one didn't touch the other day. This one touched. I'm using a traditional kind of pivot setup here. I'll take you through that. Here's another one, triggered, went long, but it's triggering at odd times of the morning. So the best thing to do is at night, when the next day comes up, is place a buy order in always, guys, in the direction of the trend. So place a buy order on that blue line with your stop 5 pips below R1. You guys should know this. Sorry, not R1, S1. Just stick it below there, and your target, obviously, 5 pips below R1. Yeah, so that's R1 up here, that's S1, and so that's your target. And so you just place that order, and you place it across the board. They should all go. As long as the chart is trending, you'll be fine. Here, looking at the weekly, and this is Euro Aussie, you can see that was our recent support. So it looks as though on the weekly we have several days' worth of room to run up to that next key level, which is up there. So, if it doesn't take a breather, if it doesn't come back and test this and it goes, it's got that much room to run. And there's lots of snipers and pivots and stuff. And pivots you can do as an end of day if you just place your order at night, at 12 o'clock at night. So there we go. And that just, these setups occur, as I said, on all those same charts that I showed you. What's Kiwi Swissy doing? Let's go have a look at Kiwi Swissy. Okay, so Kiwi Swissy is the same kind of idea. Every night, it's going down, it's heading in a downtrend, pretty much like that. So we're looking to see bounces on the way down on the blue line. Okay, placing our stop above the red line and our target above the green line, and that's it. We'll just take that down. So there's that, and so that just, in terms of picking, income generators, for example, there hasn't been a single one here. And what happens is the only time the income generator really fails, there's 2 times, is one is when the market's ranging. When the market's ranging, guys, when the chart is ranging, something like this, you're going to get a complete mixture of signals. This is cable CAD because it's going up and down and up and down. It needs a trend. So the indicator needs a trend. So what you do is that's the first thing that messes it up. The next thing that messes it up is when it does hit the bottom of a big move and changes direction. At that exact moment in time, which you should be able to identify as a support or resistance level, it'll give you signals in that direction when in actual fact it's reversing. And what you're waiting for is price to come up, pull back, at which point you'll get your first income generator to go long, and it'll be in the direction of the trend. Right now, we haven't had a pullback. Look how strong this is. So when we get a pullback here, you'll get income generator signals to go long, and then I say, yeah, go for it. So we don't have anything there. Pound Kiwi, we had. On that move up, we actually had pullbacks going, and we had a pullback here as well. And those income generators were fantastic. So they were really good, and they were in line with the strong trend. Then we have nothing on Euro Kiwi and nothing on Euro Aussie. So I guess what I'm saying to you guys is identify that there's a daily trend that's happening. Check your support and resistance levels. Identify that, and then take income generators in the direction of that. So if we're looking at Pound Swissy, here's an interesting example, right? You look at the weekly, and let's look at this. Look how nicely it's bouncing. Higher lows, higher highs. Okay, so it's kind of in an uptrend, and this is on the weekly. So to me, that would say, well, I should be looking for income generators to go long now. It's interesting, because when you look at the weekly, that means that for this particular part of the chart, the daily was in a downtrend. It's in a pullback. But the daily itself doesn't look that great. The daily is kind of like, well, it's giving you sell signals. So this gives you that awareness of saying, actually, you know what, I have a feeling the weekly's probably going to bounce and go long here. And as you can see now, what's happened is today we've started, even on the hourly, we've started producing high lows, high highs. So we are at that potential point where price has found support. Look at that. It's a breakout, retest, and a retest. It's now found support there. Is probably going to head up to that next level. And that next level, by the way, is determined over here. So you can kind of see where the likelihood of things are going. We're on the right side of it. And I would therefore know I want to disregard these sell signals, because on my weekly, it doesn't make sense. The weekly overrides the daily. So what you do is you want to wait for the daily to turn into an uptrend and then go with all those long things. Go with all the long setups. So what we'll find here over the next few days is a move up, and it'll pull back, and it'll give us a buy signal. And then you can take it. But that is taken from me paying attention to what the longer-term chart is doing, and then going in line with that. And an income generator, you're going to be in it for several days, or even as long as a week or two. So you want to be, that's why you need the weekly chart. You need to understand that for 2 or 3 of these bars, you could be in a trade on that chart. Finally, this pivot trade stop workaround is something that I wanted to identify. I don't know how many people are aware of it, but we have been alerting people to it. This is a traditional pivot point indicator that I use. It's very standard, and basically it's just standard. It has my pivot level, my R1, R2, R3, my S1, S2, S3 levels, and this is the one you were taught on the course. You were taught how to trade it manually if you wanted to do that. You would always go in the direction of the trend. Actually makes the most sense, and then do a breakthrough, a retest, and go long. We were taught actually how to trade the breakthrough, and then just trade it up to that level. Or if it was going down, we would trade it breaking through down to that level. The indicator that most of you beginner traders will use looks like this. And the way it works is, it's very simple. It looks at the 200 moving average and the 50, and basically it determines that if the 50 is above, it tells you to buy. Okay, so in this particular case, because the 50 has crossed over, you can see why the colors have changed, and you can see why it's telling you to buy. And so it is telling you to buy. But now, because I've shown you this chart, we've looked at the daily, we've looked at the weekly, to me, this buy signal actually makes sense, because kind of we've seen that there's a break above that and a pullback. But if you got in this morning and you were up at 5 o'clock this morning, this thing would have been telling you to sell. So first of all, you need to be able to identify your chart. You need to pay attention to where that chart's going, and then you need to look for signals that go in line with that. But one of the things I really wanted to cover with you today, which is quite important, is that this indicator currently places the stop in the incorrect place. And we're just fixing the code. We're getting it sorted. But for the moment, I need to show you a workaround. So what I want to do is I'm going to take this one off, and I want to show you what happens. So with no price on this, go with Euro Aussie for now, so it's a clear chart. So we know with Euro Aussie we're looking to go up. You can see how strong and how far apart those moving averages are. What I'm going to do is I'm going to bring up the traditional pivot points indicator, which looks like this. All right, and I'm just going to briefly highlight where the stop is. Because we're going up here, our stop would be on this side. So our stop would be 5 pips below S1. All right, and our target would be 5 pips this side of R1. So the idea being is you want your target exposed. It should be exposed nicely in there, and you want your stop protected behind that support level. So you want your stop behind that. That's very important, guys, behind that. And you want your target exposed here, not protected by that. So that's why we have our target 5 pips closer to the blue line, and we have our stop 5 pips further away from the blue line, and that's actually what we do. And then, of course, we have our entry on this level. So what I'd like you to notice, let me just do it this way. I'm going to change the colors here so it all makes sense. So our target we'll do is gold, which will be that one. We'll do our entry at that level, which is our green, well, it's our entry, and we'll do our stop down here. Now the way that the setup actually works is it tells you, it uses green as your goal. So we'll just make that green. So that's where we want our price to be. Now I want you to note what happens when I bring on that indicator. So just move it this way. And then I'm going to wrap up the midweek market focus. So when I switch on that indicator, I want you to see where it comes in relation to these things. All right, because obviously there's an issue here. So once I bring it on, you'll notice that the stop is now placed up here. This is your red line, that's your stop, and it's actually on the wrong side of this green line. However, the blue line is perfect, and the green line is absolutely perfect. So all of these are absolutely fantastic. They're in exactly the right place. But what you need to do is you need to place your stop 10 pips further away. Why 10 pips? Well, because it's 5 pips on the wrong side. So it's actually too close to this blue line. It actually needs to be not just 5 pips here, but it needs to be another 5 pips away. So currently it's saying 2261, so my stop should actually be at 2251. And that's very important, guys, to do that, because you'll notice how this level often acts as support. So I need you guys, whether you are going long or short, you need to make sure that your stop is 10 pips further away from the blue line. The blue line is perfect. The green line is fine. You need to make sure your red line is 10 pips further away from the blue line. Doesn't matter which way it's up or down, it's got to be further away from the blue line. Alright, and so I just want you guys to be aware of that. Let's just pop down quickly and have a look at, it looks like the euro is climbing as we speak. Is it? Yeah, there goes the euro. So let's have a look at that on the weekly. I'll finish this up quickly and then just show you that one. So we're looking on Kiwi Swissy just to see what's going on this one. So again, the red line that we have is here. We actually need our red line on that side of our pivot. Okay, it needs to be further away from the blue line. I don't think I can make that any clearer, so I just want to make sure that you guys know that. Let's have one last look before I wrap up here quickly, which is just to say, let's look at what the euro is doing, because of course we're trying to determine right now if the euro is going to go long and break that trend line. And you can see it's incredibly bullish. Pulled all the way back and it's now reversed. And this is a daily chart. If I go down to the hourly chart, I want you to see what's happened here. You can just see a very strong move. It's obviously bumping up against this little temporary downtrend line I've done, but there's that key resistance level. It looks like it's going to go long. So that's fantastic for me for a lot of my trades, because I'm long in terms of the euro. I'm expecting it actually to break that and go long on a longer term basis. And I have technical analysis that's on my side showing you that. But if it fails to break through, it's going to reverse, and I'm okay with that. Right now I'm not trading it. I didn't even trade this move, which was a very, very, very simple setup. It was literally the most basic of setups. It was just a pullback to a key level, and then it just went long. So I'm going to leave it for now, because I'm actually waiting for it to break through and then bounce back, and then I'll trade it long. But that's it, guys. So let's leave this. Let's see if the euro goes long. Don't, we will have pullbacks, obviously, but I think the key thing is if we break this key level, and if we break this downtrend line, the longer term implication is that for the next few months we'll be looking for long moves on the euro. All right, and that could go for 6 months even. So let's just see what happens there. If, on the other hand, this downtrend line is held intact and respected, and price pulls back and starts to break this uptrend line, the longer term implications for the next 6 months will be looking for short positions on the euro. And so that gives you some kind of confidence with regards to which way you want to go, and for most of cable as well. And I think that's it. So I'm going to wrap that up. I think I've covered everything here, guys. It's been a busy session. I'm sorry if you're falling asleep. And otherwise, look, I wish you happy trading. Trade the good charts. Keep a journal of all your trades. Keep to your stops. Follow the strategies. Spend time with your coaches. Really, the value for you guys is master those basic strategies, because they make good money. I trade snipers. When I have nothing else to do and I've got half an hour to kill, I'll trade a sniper and I'll go straight to the trending chart that I know is making money. It's just that easy. It really is. And work on your technical analysis, and don't listen to the news. It'll just mess with your head. Stay out of the market on non-farm payroll. It doesn't really matter whether the news is good or bad or what it is or what it implies. It'll just move the market, and therefore it's bad for your trades. And with regards to closing trades out, I close them out on non-farm payroll. I might close them out in the morning before, but for example, my cable CAD. I'm in for the next couple of months. Therefore, I'm just going to leave it regardless of, and it's a cross. So therefore, it's not necessarily going to be affected that much. So the cross pairs don't always get that affected by it, but certainly your majors will get affected by it. So just think about those kinds of things, and don't be afraid of the market. The market doesn't know you exist, and it's quite friendly as long as you just follow the rules and chat to your coaches about those rules. And that's it. So otherwise, I wish you a fantastic week, and keep calm and carry on trading.